The nightly business report on Vermont ETV is funded in part by the DPM Group of Montreal, independent brokers of full financial services dedicated to a tradition of financial security and peace of mind, and by members like you.
A surprisingly weak employment report and a decline in the government's leading forecasting gauge. Some economists wondering if the economy's soft landing is turning into a recession. Good evening, I'm Cassie Seifert in New York.
And I'm Paul Kangas in Miami. The weak economic data triggered a bond market rally today, but blue chip stocks headed in the opposite direction. And we'll talk about the economy's prospects with President Clinton's National Economic Advisor, Laura Tyson.
Nightly Business Report is made possible by Digital, doing whatever it takes to make information work for people and not the other way around. Franklin and Templeton Worldwide form the more than $115 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, helping to build your financial future with comprehensive trust and estate planning services. A.G. Edwards, serving investors for more than 100 years. And is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE.
The one thing the markets hate most is a surprise, and they got a big one today when the employment report for May revealed an unexpected loss of 100,000 jobs. Economists now believe the Fed may have to cut interest rates soon to head off a possible recession. We have two reports tonight, beginning with Scott Gervey.
This employment number was a shocker. Economists were expecting to find more than 150,000 new jobs created in May. So the unexpected loss of 101,000 jobs cleared the previously foggy economic picture. The rate of growth is slowing significantly.
The economy looks like, on the production side, it's falling off a cliff. And I think what's happening is manufacturing is in a hurry-up mode to cut back production. It means they're going to shed jobs to get inventories in line with sales that are very weak.
The unemployment rate, as determined by a separate household survey, actually fell to 5.7%. But the data show a huge decline in the size of the labor force. This makes little sense, and many economists are dismissing it, saying new survey methods put in place in January are flawed. They put far more weight on the survey of employers, and that showed weakness across the board. Manufacturing payrolls lost 56,000. Construction payrolls were down by 57,000. And retail sector employment lost 8,000 jobs. Average hourly earnings fell, and so did the length of the average work week. Clear signs that businesses are cutting back on production, but also signs that there is little inflation-producing wage pressure. Meanwhile, the leading economic indicators for April fell for the third straight month. That is often said to be a recession warning. While that does not mean recession is inevitable, most economists have gone back to their calculators to revise their growth estimates downward, and many predict the Federal Reserve will lower interest rates at the next Policy Committee meeting on July 5th.
I think the probabilities of a Federal Reserve cut in the federal funds rate at the July meeting are very, very, very high. I would have given you 50-50 probability at the beginning of the week. Now I think it's almost a certainty that they will cut interest rates in July.
The change in the economic climate is sending the stock and bond markets running for cover, but in opposite directions. Suzanne Pratt has that story.
The extremely weak economic data sent bond prices soaring and yields tumbling. Long-term interest rates sank to their lowest levels in 16 months, with a yield on the 30-year Treasury bond closing at 6.54%. from 6.62% Thursday. It began the trading week at 6.76%. Economists say with little sign of inflation in today's economic data, bond yields could continue to fall, but not by much more.
I think it's kind of dangerous to jump in at this late date. We've had a spectacular move up in price and down in yield for long-term bonds, and I think we're about to go into at least a holding pattern. It is important to emphasize that
the fundamentals are still good.
But while the bond market was reaching for the stars, the stock market was having a more terrestrial day. The Dow Jones Industrial Average was down about 40 points just after the opening bell. And after briefly moving into positive territory, it closed down 28 points. Falling interest rates usually provide a boost for the stock market, and the Dow has been riding on the coattails of this year's tremendous bond market rally. But some analysts say today could mark a parting of the ways for stocks and bonds, as investors worry the economic slowdown could mean a decline in corporate profits.
What's been happening is bad economic news has been interpreted as good news for the stock market. This morning it seemed that bad news really was bad news.
Analysts say the stock and bond markets could be in a state of flux in the coming months. That's with investors awaiting the new evidence showing exactly where the economy is headed. Suzanne Pratt, Nightly Business Report at the New York Stock Exchange.
The much weaker than expected May jobs report, coupled with the news of the third straight drop in the index of leading economic indicators, sent a recessionary shiver down Wall Street early today, resulting in over a 40-point tumble in the Dow Industrial Average right at the outset. But considering that it had risen 104 points in just the 3 previous days, traders weren't panicky, especially after bonds rallied sharply. So by 10:30 this morning, the Dow shot back to post a 14-point gain. Mid-session brought renewed selling in the blue chips, which pushed the industrial average to an 18-point deficit over the noon hour. Despite the fact that market breadth turned 14-9 positive throughout the afternoon, the Dow Jones Industrial Average couldn't shake off pre-weekend selling pressures, and it closed with a loss of 28.36 points at 4444.39. But for the 4-day week, which had only one down session, namely today, the Dow actually advanced 79.39 points. The volume today perked up considerably, about 21 million shares more than yesterday, and up volume exceeded down volume by about 11 million shares. The Dow Transports had a bad day, down 27.5 points, both the rails and airlines falling on the rather dismal outlook for the economy. Utilities, however, had a good day along with the bond market, up 2.11 there, and the closing tick slightly bullish at 327 plus. Standard & Poor's 500 down nearly a point, no new high there. Same story with the 100 with that loss of 1 2/3 point, but the mid-cap 400 managed to gain a new high with that advance of 0.64. Commodity Research Bureau spot index fell 0.64. The New York Stock Exchange Composite fell 0.20, but the value line edging toward a record high with that gain of 0.31, and the Wilshire 5000 did achieve another record high with that gain of just about a half a point. The bond market rocketed higher on the opening after the May jobs report, and the leading indicators suggested the economy is in for anything but a soft landing unless the Federal Reserve makes a move to cut interest rates, like the small but often trend-setting Southwest Bank of St. Louis did today by reducing its prime rate from 9 to 8.5%. When no major money center banks followed suit, bonds lost a little of their luster, but tax-free still closed up 1 1/4 points on average. Corporates gained 3/4 of a point, and the long-term government market, after being up 3 points early in the day, ended with a gain of 1 6/32, bringing that yield all the way down to 6.54%. The Lehman Brothers long bond index, a big day on the upside, better than 27 1/4 points, and Fed funds edged up just a touch from yesterday to close at 6 1/8%. Later, I'll show you where the action was on Wall Street today. Cassie?
The Clinton administration is sticking to its soft landing forecast for the economy in spite of today's bad numbers. Earlier today, National Economic Advisor Laura Tyson told Washington correspondent Dennis Moore that she still expects the economy to pick up again in the second half of the year.
Dr. Laura Tyson, have we gone from a soft landing scenario for the economy to a bumpy landing, or is it time to start foaming the runway?
I think that we're still confident that over the course of the year, a soft landing scenario seems the most likely outcome. That doesn't mean that there might not be a bump here and there, and clearly I think the numbers for the second quarter so far suggest the second quarter is coming in weaker than most private forecasters had expected. But there are reasons to think that the economy will have additional lift later this year from increased exports and also from lower interest rates, really encouraging interest-sensitive spending.
Dr. Tyson, it could take some time for those lower interest rates to kick in. I mean, could they be reviving manufacturing and housing after a recession instead of before?
Well, first of all, I think we've seen lower interest rates really start in the fall of last year, so those effects are already building up in the economy. And I think that another thing that's going on here is we seem to have had a small inventory cycle, meaning an inventory buildup. Now, those levels of inventories don't look to be that high, but there is some time during which, after an inventory buildup, production slows down so that inventories come down a bit.
Well, is this growth of this economy so weak, so fragile that some event or combination of events, whether it be a major drop in the stock market, trade conflict with Japan, or even Bosnia, could push it over into that downward spiral?
I think it is fair to say that when you see an economy that's slowing down and is in a slower than expected mode, there is cause for concern, precisely because, as you point out, if something unexpected hits the economy when it's growing at a slow rate, of course it has less room to move down. So I think I want to emphasize that, that we look at these numbers with some concern. On the other hand, all the things we can predict, and we can predict shocks, okay, all the predictable variables suggest the economy will continue through the year to end up with a soft landing.
Dr. Laura Tyson, thank you.
Thank you very much.
President Clinton today renewed most favored trade status for China for another year. The president says he still finds China's record on human rights unacceptable. But last year, Mr. Clinton reversed himself and decided to divorce trade issues from human rights. Well, the United States and Japan have agreed to a compromise on dates and places for talks to resolve their auto trade dispute. The first meeting will take place in Geneva by June 15th, just prior to the G7 Economic Summit in Halifax. U.S. Trade Secretary Mickey Cantor has suggested that a second round of talks, set for June 20th and 21st, will take place in Washington.
Also on the trade front, the U.S. has agreed to give serious study to the creation of a transatlantic free trade zone. The long-term goal would be to integrate the economies of North America and Europe, with short-term goals aimed at boosting trade and jobs across the Atlantic Ocean. Many of the 15 countries in the European Union already support a transatlantic free trade proposition.
Still ahead on Nightly Business Report, bankrupt Orange County, California is trying to head off default. We'll look at what the county has done lately to gain a reprieve from its debt. Certainly one of the most volatile weeks we've seen on Wall Street for quite some time. But even though we were down 28 points on the Dow today, for the week it still gained nearly 75.5 points. And the broader market today, despite the Dow's loss, was higher by a 14-to-9 ratio. 262 new highs for the year, only 14 new lows. Hanson PLC, 10.3 million shares, topped the active list, no change. Could be the winding down of a dividend play. It was XD last week. Motorola fell 1 1/8, even though Donaldson Lufkin upgraded the stock from outperform to buy. Company did get a Department of Defense contract to develop a computer-based security manager program. Chrysler down 0.5 today. Ford Motor edged 1/8 higher. No change in Telmex, although the Mexican market rose 21.5 points on the IPC index. That's 1.1%. Micron Technology up 1 full point. A Soundview financial brokerage analyst says the semiconductors are going to be decoupled from the economy. No matter what the economy does, they're going to do well, he says. Portugal Telecom went public today. 6 million shares offered at $18.72.5. They opened at 19 5/8 and settled back a bit, but still higher than the offering price. Merck gained 0.5. Digital Equipment down 7/8 of a point after Prudential Securities downgraded the stock from buy to hold. AT&T, 10th in volume, edged 1/8 higher. AMR, parent of American Airlines, down 1 1/4. The transport stocks weak today on the prospect for a weakening economy, no doubt. CSX losing 2 5/8. Fannie Mae up 3 7/8. Lower interest rates generally good for its business. Olin Corporation stock down 2.5 points. Merrill Lynch downgraded it from buy to long-term neutral. Texas Instruments up another 2 3/4. Yesterday it gained 5 3/8 after Soundview Financial increased 95 and 96 earnings estimates. United Technologies, the biggest loser in the Dow 30, losing 2 1/8. High-low automotive, high today, up 1.5 on news it'll be acquired by Chief Auto Parts for $11 a share cash. 20th Century Industries, an insurance company, up a full point. Late yesterday, Standard & Poor's raised the company's claim-paying ability ratings. Pep Boys, the auto store chain, auto parts, up 1 3/4 points. There's a rumor making the rounds that Sears Roebuck may make a buyout bid somewhere around $40 to $45 a share. And the big loser by far of the day, Core Pro Companies losing almost half of its value with that 8.5-point loss. The company sees a fourth quarter loss and predicts 95 earnings will come in around 40 to 45 cents. The street was looking for maybe $1.15. The company's involved in corrosion control engineering services. Manpower, a temporary help company, down 2 1/8. Obviously a negative reaction to the very bad and weak jobs report out today. Melville Corp, the apparel and shoe company, down 2 1/8. Yesterday it fell 1 3/4. After announcing a 0.7% drop in May's same-store sales, now the company is lowering its own earnings expectations. NASDAQ trading a gain of 4.15 in the index today. For the week, it gained 1 1/10 points exactly. Volume up, but 1.5 million shares more than yesterday. 17 stocks up for every 16 lower. Intel topped the active list, up 1 3/4. Microsoft back down 1 point. Applied Materials gained 2 3/4. 3Com off 3/16. Cisco Systems up 3/16. Amgen gained 1.25. Atmel was up 3 5/8. Lotus up 3 1/4. Vague takeover rumors surrounding Lotus again. Cirrus Logic up 2 3/8. The company has approved a 2-for-1 stock split. And Oracle up 3/8, 10th in volume. International Lottery and Totalizator up 1 1/8, the best percentage gainer. The company said it signed 3 contracts for its gaming equipment, 1 in the United Kingdom, 1 in Russia, and a $5.5 million contract in Sweden. Information Resource Engineering up 4.5 points. A Barber and Bronson brokerage analyst made positive comments about this stock on a CNBC business program last night. And Quarterdeck up 1 1/16. The company signed partnerships with several online internet providers, including UUNet. Over the American Exchange, a loss of 3.06 in the index today. For the week, it fell 2.90. Volume up, down a bit from yesterday, and 274 higher, 295 lower. Viacom B topped the active list on over 3 million shares, down 1 3/8. Global Ocean Carriers rising a half, best percentage gainer. The company expects the remaining 3 quarters of the year to be profitable. And Empire of Carolina losing a full point. The company had no news to account for the weakness. It makes plastic toys. That's our Wall Street wrap-up, Cassie.
Bankrupt Orange County, California reached a tentative deal today with a bondholders committee to avoid defaulting on nearly $1 billion in short-term debt this summer. The deal must still be approved by the bankruptcy court and bondholders themselves. Reuters correspondent Kevin Smith reports.
At a meeting this morning, Orange County officials signed off on a deal that would allow the county to defer payment for about a year on $975 million of short-term debt, coming due between June 30th and August 15th. If approved by bondholders and the bankruptcy court, the agreement would roll over the short-term notes until June 30th of next year, would continue to make interest payments on those notes at 74 cents on the dollar, and would accrue the remaining 26 cents of unpaid interest, plus an interest rate bonus of 95 basis points, or nearly 1%, as unsecured debt to be resolved in the course of the bankruptcy proceeding.
The deferral of the maturities that would occur pursuant to the rollover arrangements is just to give us the time to work out a more comprehensive and more permanent restructuring program. This is not the end of the county case by any means. It is a short-term reprieve. That's it.
How would the county repay the principal and additional interest a year from now? Orange County Chief Executive William Popejoy says the answer is the half-cent sales tax increase on the ballot here June 27th. Surrounded by crates of the beleaguered county's trademark oranges, Popejoy was out pitching the tax hike today to reluctant local business executives.
Measure R passes, we will be able to put together a financial plan to pay back the bondholders. And if Measure R fails, we will not have the funds to do so.
The catch is that bondholders have until early July to accept or reject the deal. That's after the sales tax vote. If the tax hike is not approved, all sides agree that bondholders might be more likely to reject the deal, let the county default, and take their chances in court. Some of the larger bondholders have grumbled that this deal is being presented as a take-it-or-leave-it proposition. But when dealing with a bankrupt county, taking it may be their only choice. Kevin Smith of Reuters for Nightly Business Report, Santa Ana, California.
Coming up, tonight's Market Monitor. Peter Green, editor of Green on Money.
General Motors plans to start selling right-hand drive Saturn cars in Japan by the end of the decade. The automaker said the cars will be distributed by Japan's Yanase company and sold by independent dealers. The right-hand drive cars will be built at a GM Saturn plant in Spring Hill, Tennessee. The move into Japan is part of a broader plan to expand production of the Saturn line.
Japan's 4 biggest brokerage firms today reported losses for last year due to weak results overseas and in some parts of Asia. Nomura Securities was hit hardest by big losses in its European operations, but the Daiwa, Nikko, and Yamaichi securities firms also posted group losses for the year ending March 31st. It is the first time Nomura posted group losses since it began releasing group results in 1978.
The Justice Department plans to assess investigators' progress in the probe of the NASDAQ stock market at the end of the month. The Wall Street Journal said today that Ann Bingaman, the Justice Department's antitrust chief, gave investigators a late June deadline to evaluate what they've gathered in the NASDAQ probe. The Justice Department is looking into allegations of price fixing and collusion by NASDAQ market makers.
My guest market monitor this week is Peter Green, the editor of the Green on Money Market Letter based in Cinnaminson, New Jersey. He's with us in our New York studios. Welcome back to the Nightly Business Report, Peter.
Thank you, Paul.
You come to us on a very difficult day. A lot of investors are trying to decide which one is right. The bond market, which seems to be saying we're going to have a anything but a soft landing, maybe even a recession, the way the bond market is charging higher. The stock market doesn't want to give up and say, this is not going to hurt corporate earnings. Which one is right?
I think the stock market will win.
Why?
Well, because I think they're going to lower interest rates.
Oh, so that will then...
That'll give it another shot.
Already, the low dividend rate of the stock market is starting to look pretty good against what the bond market is yielding.
Well, that is true.
All right, so you're betting that the corporate earnings picture still remains somewhat bright?
Well, it remains bright until it looks worse.
Okay.
So as of right now, the stocks are going to win.
But we're good for the rest of the year, you think?
That's a long way away, Paul. But I think for a month or two.
All right. Now, Peter, we've had a lot of volatility this week in the stock market. Usually, that could signal the top of a market, at least an intermediate top. Do you see a major correction coming? Maybe not a bear market, but a major correction?
I think we're going to have some 80-point and 100-point days up and 100-point days down as the mutual funds start making their move, either trying to get out and raise cash to get back in again in a different sector, in sector rotation.
Well, your last visit with us was August 5th of last year. The Dow stood at 3747, and you were none too bullish at the time.
That's true.
You sort of been struggling along with this market, very selectively buying issues here and there, and some of them turned out, but not a great deal of gain. Your basket of mutual funds up about 6.5%. The Dow is up like 16%. Are you changing your strategy now?
Well, I use that basket of mutual funds because I gave that sell mutual fund order last August. And I just wanted to see how you would have done if you stayed in mutual funds versus cash. And the risk reward wasn't that great. If you stayed in, fine, hang in there. Mm-hmm. But I like gold shares.
Gold shares? Well, that means trouble ahead usually, doesn't it?
Well, these Japanese trade talks really look as if they could be ugly. And we've had some currency problems, and the dollar keeps sinking. And a little bit of gold could be very, very good, particularly if it goes through $400 an ounce. And if the central banks start buying gold instead of selling gold, that can change it. And if the producers move their price of delivery above $400 an ounce, that'll help as well. And I think they're going to do it. Last
August, when you were with us, you did recommend FCX Freeport copper and gold.
Right.
And it's right about the same price as it was, 21. Right. You still like that? And what else?
Well, I don't have it, but I like American Barrick. I like Battle Mountain Gold. That's more volatile. I like Homestake. I like Placidome. And I like a speculative stock, Siscon Gold, which has just started bringing gold up.
Now, is this to the exclusion of practically anything else? You're concentrating your investments in gold?
No. I also like the beaten down stocks. I like Talbot's, which is a store that sells to children and women's wear in the suburbs. That stock has been between $26.50 and $36.50. It just reported yesterday that sales were up 9.6.
Okay.
These are people that can afford to buy clothes if they want to. So they serve a pretty affluent market.
We only have time for one more.
International Gaming Technology.
IGT?
Yes.
All right.
That's been beaten down. The casinos are opening all over the place. It's the world's biggest manufacturer of electronic gaming machines.
All right, so you've kind of got the market straddled here. Gold in case there's trouble, and some of these other issues that you like because the economy might continue along.
That's right.
All right, very good, Peter. Thanks for being with us.
My pleasure. Thank you.
My guest market monitor, Peter Green, of the market letter called Green on Money.
That's Nightly Business Report for Friday, June 2nd. I'm Cassie Seifert in New York. Have a great weekend. I'll see you Monday, Paul.
Good night, Cassie. I'm Paul Kangas in Miami, wishing all of you the best of goodbyes.
Nightly Business Report is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE. And is made possible by A.G. Edwards, helping to build your financial future with comprehensive trust and estate planning services. A.G. Edwards, serving investors for more than 100 years. Franklin & Templeton Worldwide formed the more than $115 billion Franklin Templeton Group, a global alliance of over 110 mutual funds and investment products, including U.S. government securities funds. Digital, doing whatever it takes to make information work for people, and not the other way around. And by the financial support of viewers like you.
Join us again Monday evening at 7 for the Nightly Business Report. And be sure to tune in each weekday morning at 6:45 for the Morning Business Report. Coming up later tonight at 9, Profits and Promises focuses on opportunities in the increasingly free and freewheeling international economy. That's tonight at 9. Now stay tuned to Vermont TV for a recap of the top news stories in the state on Vermont This Week.
Nightly Business Report presents Investing in the 90s, an investment seminar weekend featuring Paul Kangas, Elaine Garzarelli, Stan Weinstein, and more. June 23rd through the 25th in Boca Raton, Florida.
The Nightly Business Report on Vermont TV is funded in part by the DPM Group of Montreal, independent brokers of full financial services, dedicated to a tradition of financial security and peace of mind, and by members like you.
Saturday, spend the afternoon with the great chefs. It's 2 new Great Chef specials. First, Great American Inns features chefs from 8 of America's finest, including Le Cheval d'Or and Jeffersonville, Vermont. Then, the Great French Fest has 8 masters of cuisine classique showcase their talents. Vermont's Café Shelburne is among them. Don't miss an afternoon with the great chefs. Saturday, right here on Vermont TV.
Family secrets. They can bring us together. They can tear us apart.
And when our families are filled with no talk and secrecy, we simply can't grow and be free and become the people we were meant to be.
John Bradshaw has helped millions create healthy, loving new lives. For everyone who's lived in a family, watch John Bradshaw on Family Secrets.
A complete new series for you and your family, presented all in one day. Bradshaw on Family Secrets, Sunday afternoon on Vermont TV.